Welcome. My name is Van Richards, and I'm a chartered financial consultant. And I'm here today to talk to you about how to look at stocks, how to analyze those particular stocks, and how to pick them apart. We're going to take a look at the earning competitiveness and the history of some of these different stocks, actually one for today. And we're going to pick it apart. We're going to talk about it just a little bit. The one stock that we have to talk about today, I think a lot of people use, and that's Walgreens. I, for one, use Walgreens a great deal. But let me ask you this store. I haven't been, well, I've been into the Walgreens perhaps once in the past 2 or 3 months, but most of the time it's through the drive-through or the drive-up from that point of view. But we're going to talk about it today and see what happened with the news recently and how that's going to affect everything going forward. So without delaying any further, let's go ahead and get into the NASDAQ stock analysis. Don't you love when you click a button and something just doesn't happen the way that you hope that it would? Okay, we're going to get into this just a little bit more today, but I want to remind you that please subscribe if you like what you're seeing, and let me know your comments. Let me know where you're from, and let me know what your thoughts are from today. Also, I want to remind you that if you're in Texas and you want to talk to me personally about your retirement or your investments, you can go over to richardsfinancialplanning.com and sign up for a time. I'll give you 20 minutes for free. We'll get a chance to talk about whatever you would like from that point of view. All right, let's go ahead and get into talking a little bit about Walgreens today. You know, everybody is kind of familiar with the way that Walgreens works, but I want to just give you a little bit more in-depth view of the way that the company is put together. Okay, Walgreens finished the day down just a little bit. The overall market was pretty even. The NASDAQ was off a little bit. The Dow Jones Industrials was up. So Walgreens was off about a half a point, a little bit more than that. But I want to talk to you just a little bit about the company's history and what's been going on. We had some news recently that came out on the stock. Now, usually what I try to do is I look at it over a longer time period. But since we just came off of the quarterly report, I want to take a look at the past week so that you can get an idea of how that quarterly report impacted the price of the stock. The stock actually 5 days ago on the 9th was at about 37, 41, 42, right around in that range. And I'm not sure, I believe that there was some anticipation that there would not be a good result for the quarter, but it actually turned out to be pretty good. So if you follow the dancing cursor on the spaghetti graph, you can see when the earnings came out, it actually had a pretty good spike. It ended today at 37.41, but let's take a look backwards just a little bit more, because this stock, I owned this stock about 3 years ago and I sold it. I personally felt that they were questionable in what was going on, and you know, hindsight's 2020. It actually paid off. But when we look at it over the past few years, in 2017, the stock was at about 61.40, and again, it ended today at 37.41. So they've been on a 3-year slide. They're down about 39%. That's a loss, an APR loss of about 15% a year. Now, of course, we hope that the past performance is not going to be a guarantee of the future results, but when the earnings news came out, it was actually really, really pretty good. So we have to take a look also at some current things. Women, I think I've got some news that came out recently today. Okay, this was reported today that Pfizer could seek emergency approval for a COVID vaccine. Now, you might be wondering, how in the heck is that going to affect Walgreens? Well, the thing that's going to affect Walgreens is the Trump administration announced just this afternoon that there was a long-term deal that has been put in place with Walgreens and CVS to distribute vaccines. Also, President Trump, in an address this afternoon to a group of senior citizens, told the senior citizens that they would be the first to get the vaccine. Now, that's big news when you take a look at this overall, because senior citizens make up a great deal of the customer base for Walgreens. There's some partnerships that have been going on too that were discussed in the quarterly reviews that went on with Walgreens this week. They've paused some of their relationships that they have. They've trimmed some internal partnerships and some operations. They've also had a good increase in earnings per share. Previous earnings in 2Q was at 83 cents a share. This last earnings report was up to 102, but they're still off about 28% based on last year. Now, a good thing for those of you who like dividends, you're going to see that the dividends actually increased. And I think that that's really, really good news. And I just love dividends. I hope you do too. So, okay, there we go. All right. The dividend right now is at 4.97%. And my gosh, that is a great dividend for a stock. So I'm going to say this in the end too, but if you are a dividend investor, this is a really good stock to consider. You have to have it fit into your portfolio. But as we look further at what's going on there, U.S. pharmacy sales grew by about 3.6%. The wholesale distribution business was up 4.3%. And international sales, however, their Boots Alliance and I believe also their Chinese business was off as well. The pharmacy sales were up 3.6%. Retail sales were up 12.5%. So, you know, a moment ago when I talked about President Trump announcing that the senior citizens would be the first in line to get the coronavirus vaccine, that's the foot traffic that's going into Walgreens. Not only will the alliance with the government to distribute the vaccine help the company in itself, directly helping customers, but if you have more people that are coming into the stores, those retail sales are going to make a big difference. Now, if we look at, remember that graph that I showed you a little bit earlier where it showed the 3-year slide down? I think if you compare it to the earnings, have actually not been that bad. Earnings every quarter have been great. Their dividends have been pretty good too. It's about 46 cents a share, and it actually went up to 47 cents a share. Now, remember, a moat with a company is going to be that barrier that's out there that stands between them and their competition. Now, that moat's going to be what keeps the competition at bay. This is really interesting when you look at this company going forward, because if you see a Walgreens on a street corner, you might not think that they make a lot of money, but they make a great deal of money. Each Walgreens averages about $13 million in revenue per location. Now, would you compare that to CVS? That's a big difference. It's at $8.6 million. And when you compare that to drugstores nationwide, it's around $5 million. So that makes a big difference. They have strategic partnerships also that are a big deal. And I want to detail those just a little bit for you. Amerisource, Express Scripts, Prime Therapeutics, Humana, LabCorp, Kroger, United Healthcare, and Optum. Now, Kroger is a unique relationship because in Kentucky, they actually started a partnership with Kroger where they were for the first time putting the drugstore inside of the Krogers. And that will actually, it would replace Kroger's pharmacy business, but if the relationship works out well, Kroger's may be focusing more on the grocery business and moving further away from the pharmacy business, kind of the way that Target has done in having CVS in the stores. It's helped the businesses grow from that point of view. Now, there's positives and negatives to everything. When we look at some of the positive things going forward in thinking, is this a stock that I should actually buy? You have to realize that Walgreens actually is the largest United States retailer of pharmacy goods. They're the largest. They also have those unique partnerships that we talked about just a moment ago, and they have the in-store partnership that's going on with Kroger's that could be really good. Now, there are some negatives that could work against Walgreens, and you have to take that into consideration if you're going to consider buying this stock, because, hey, I wanted to tell you that negatives happen. The small probabilities, don't discount them too much. One thing that's could affect this going forward is the shift to 90-day prescriptions. If people do 90-day prescriptions more, then they're going to go into the pharmacy less. Medicare for all and socialized medicine could actually lower the profitability of a drugstore just because the pricing controls. The brick and mortar competition is out there. The Kroger's are competing right now. Also, you have CVS inside of Targets. You have Walmart's. You have Costco. So you have a lot of brick and mortar, and then also you have the internet retailers that you have to worry about too. So let's take a look at the spaghetti graph and actually see how this has competed, how Walgreens has competed over the past year. And if you look at the spaghetti graph, you see actually it's interesting that Rite Aid, which is considered a small value company, they're only about $500 million in value, has actually had a better year in general, but they came back down. When you compare CVS and Walmart, which are big drug retail competitors, they're about the same from that. And when we look at the companies, of course, Walmart's the behemoth company at $409 billion compared to Walgreens at $32.4 billion. Now, I mentioned before that Walgreens was the largest retail pharmacy, and you might look at this and think, hey, but CVS is at $77.99. You have to understand that CVS has other businesses. They actually are in the drug prescription business, the distribution business. So there's a big difference from that standpoint. Of course, we have to remind ourselves that the past performance is not going to be a guarantee of the future results. Draw it back just a little bit and see what's happened over the past 3 years, because this stock's value actually has decreased over the past 3 years. So it's kept in line, though, with Rite Aid and Walmart and CVS. Well, I take that back, not Walmart. Walmart's been on a tear, which has actually been pretty good for them. They have a lot of other business. All right. So as we go forward, though, we want to look and see what the analysts are going to say about Walgreens, the independent analyst. Today, they closed at $37.41. That is Walgreens. The fair market value, which is picked by, which I published this in my report to you, and it actually comes from Morningstar. And the way that Morningstar picks the fair market value is as a multiple of earnings or a multiple of sales. It just depends on how they analyze it. But they're saying that the fair market value is actually higher than the current value. Hey, that's really good news. $42 a share, and it's only trading for $37. They're saying that it's trading at about an 11% discount, so they peg it at a 4-star rating. Remember, the star rating is not like their mutual fund rating. It's different. It's just based on value and value alone. They're saying that if the price goes down to $29.40, that's really a 5-star price. Now, what are the other analysts out there saying about this stock? When 15 analysts were polled, wow, only 14, nobody's saying buy this stock. They're all saying that it's basically a hold. And that's really kind of a surprise to me when you look at how far down it's come. Perhaps they're looking at it from the standpoint that we don't see that many businesses are turning the corner right now as far as the coronavirus goes and competing and getting their business back. I think you have to look at this in perspective of, are you looking for dividends or are you looking for growth as we're going forward? And, if I'm a dividend investor, I'm going to be buying this stock. If I'm looking at this maybe over a 5-year time period or a 10-year time period, I'm probably buying this stock, because I look at it over the past 3 years and I see it's down over 30%, and they're turning the corner as far as their retail and pharmacy sales. And who else are people going to go to? CVS is the only company that competes, and CVS is not even coming close to competing with this company as far as overall sales. When you look at the fact that $13 million per location versus about $8 million versus location. So if you're a long-term investor, I think this is a pretty good stock, and it's one that you might consider. Now, remember, it's not my personal recommendation to you, because if you want my personal recommendation and you're in Texas, go to my website at richardsfinancialplanning.com and set up a time to talk to me. All right. I have enjoyed this week and talking to you all. I've got some really good comments and I appreciate them. Keep them coming in. And remember to hit that button if you'd like to get notified of new information that comes out. But I see you every day at 5 o'clock Central Time. So have a great weekend, and I will see you all next week.